See, now this area will require us to do a lot of computation, and people also struggle, though not difficult, but people struggle primarily because of lack of clarity on concepts. So before we jump on and start calculating EPS, I want to be sure that you know the difference between three major sources of finance. So we have discussed this earlier, but just a quick recap, that we can raise money through equity, we can raise money through debt. So this is typically also called as bonds. These are also called as debentures, different words. Or we have a hybrid which is called as preference shares. So let's look at it from an investor perspective, that what returns will he get when he invests into equity. He will get returns from two sources. First would be capital appreciation, and then second would be dividends. Now, is it compulsory for a company to pay dividend to equity shareholder? No. If the company makes profit, then is it compulsory for them to pay dividend? No. That irrespective of profitability, company would decide whether it wants to pay dividend or not, depending on what does it think of that amount, the profit, and what it can do with that profit. These bondholders are given compensation in the form of interest, and of course this interest is a fixed amount. So company will pay interest only when it makes profit. Yes, irrespective of profitability, which is an important point. Irrespective of profitability, company will have to pay interest. So from a investor's perspective, there is some sort of a surety that every year he will earn that 12%, 13%, 14%. How about these? Is this a fixed rate or is this a floating rate? What is it? It would generally be a fixed rate. And what would that be? A preference dividend, okay, which is given at a fixed rate. Now, if interest rate is 12%, preference dividend would be 15 or higher than 12. And what would be the reason for that? Because preference shares are considered more risky than bonds. And why are they considered more risky than bonds? Yes, but larger point is that this preference dividend is paid only and only if the company makes profit. If the company does not make profit, company will not be liable to pay preference dividend. Okay, so please get this point straight, that this is paid, dividend is paid based on profitability. So it doesn't mean that if the company makes more profit, dividend would be higher. But if the company does not make profit, they would not be paid dividend. If the company makes profit, then they would be paid dividend. It depends whether it accumulates or not. That depends on whether it's cumulative or non-cumulative. So that is, but generally, if there is no profit, that year dividend will not be paid. Are we clear with this? So now, what important point that we want to get here is, let us say company makes sales of 100. And company incurred business costs, manufacturing, sales, whatever it is, of 20. We say that operating profit is 80. Should we consider this interest as an expenditure? Is interest an expenditure? Yes. So let us say we reduce that interest of 30 rupees here. So we have this profit of 50. Now company is expected to pay a dividend of, let us say, 20 rupees, preference dividend. Should I consider that 20 as an expense? Is preference dividend an expense? Preference dividend is not an expense, and that's a very important point, that once the company's got this 50, tax would be paid after this stage, and let's say we pay a tax of 15 rupees. So your profit after tax is 35. Now it is the company who wants to decide how do they want to appropriate this profit. Therefore, interest is said as a charge against profit. Why charge against? Because it is considered as an expenditure. But dividend is considered as an appropriation of profit. How does company decide to use that profit? So out of 35, company will pay preference dividend of 20, and it might pay equity dividend of 15, or might pay equity dividend of 0, or it might pay equity dividend of 5, depending on how do they want to pay to the equity shareholders. Are we clear? So why this is important? It is important because we paid interest of 30, our profits reduced, and because our profits reduced, our taxes reduced. But when I pay preference dividend or I do not pay preference dividend, it is not going to impact my taxation. Is this clear here? So now if you're clear with this, let's calculate EPS here. Yes. Preference shareholders? Yes. So if there is a profit, you have to pay preference dividend before paying anything to these people. So now, let us say that there are two companies, Company A Gopal and Company B. Company A has made profit after tax of 500 crores. Company B made 1000 crores. Which one is better? We can't say that, isn't it? Because we do not know this profit is made on what base. So we try to dig more. So what we can say is that number of shares issued. That company issued shares of 100. Let's say company issued shares 500 shares. These are numbers. So then we can calculate EPS, which is earning per share. That how much is the profit made per share. And here profit made per share is 5 and profit made per share is 2. And of course EPS is higher in case of company A. Are we clear? So I'm writing the definition of EPS in a slightly different way. Numerator is profit available for equity shareholders. Divided by weighted average number of common shares outstanding. Profit available for equity shareholders divided by weighted average number of common shares outstanding. You will understand that. Just write down the definition for the time being. Each and every word in this formula is important, and later on you want to unremember this formula. Okay, it's fairly logical. So in numerator, in denominator we are taking the number of common shares. Common means equity shares. So in numerator we want to take profit which is available for equity shares. Now why do I need to say this? Let us say profit after tax is 500. Company is generally pays preference dividend of 100. Can I say that 500 is available for equity shareholders? No. The reason being that if the company decides it cannot pay entire 500 to equity shareholder, because it first needs to pay that 100 to preference shareholder. So this numerator is nothing but profit after tax minus preference dividend. Clear? What would be the denominator? And see how each and every word is important. In denominator we will not take preference shares, because EPS is not calculated for preference shares, it is always calculated for equity shares. That's why weighted average number of common shares. Why do we need weighted average? So let us assume that on 1st of January company had 1 lakh shares, but during the year on 1st of July they issued another 2 lakh shares. So at the end of the year how many shares do they have? 3 lakh. Now the problem is, if I write down 3 lakh in the denominator, I'm making a conceptual mistake. The mistake is that all these 3 lakh were not outstanding the whole year. This 2 lakh were issued only in the middle of the year. And that's why we want to calculate a weighted average. And what would be the weight, Gopal? What would be that weight? Weight would be the time for which those shares were outstanding in the market, the time for which those shares were available in the market. So these 1 lakh shares, assuming a financial year from Jan to December, were available for all the 12 months. So into 12 divided by 12. But these 2 lakh shares were issued in July. So July, August, September, October, December. These were available for a period of 6 months. So we will give them a weight of only 6 by 12. And therefore your weighted average would be 2 lakh and your denominator would be 2 lakh. Is this clear? That in denominator we want to calculate weighted average of the shares outstanding. So let us practice a few questions and get comfortable with this basic EPS. It's only the denominator that you need to learn to calculate smartly. Let us say number of shares outstanding on 1st of Jan. For all the calculations, we are assuming financial year from Jan to December are 10 lakhs. Number of shares issued on 1st of April is 12. Number of shares issued on 1st of July is 20 lakhs. Calculate weighted average number of common shares outstanding during the year and calculate EPS if profit after tax is 100 lakhs. Hmm? 12 lakhs. We issued new shares. On 1st of April, we issued 12 lakh new shares. How much? 100 by 29. So 3.4. Got it? We'll say these shares were available for the entire period of 12 months. But 1st of April, that means these are outstanding for how many months? 9 months. So into 9 divided by 12. These are available for 6 months. So we calculate a weighted average 10, 9 and 10. Weighted average number is 29. 100 divided by 29, it would be 3.44. Are we good here? So let us assume, add one more twist to the tale. 1st of Jan, number of shares 10 lakhs. 1st of April, number of shares 12 lakhs. 1st of July, number of shares issued 20 lakhs. 1st of October, number of shares bought back 12 lakhs. You went to the market and you bought back those 12 lakh shares. Profit after tax is 100 lakhs. Calculate basic EPS. Denominator is 26. How many of you are getting 26 as a denominator? Yes. Now see, there are two methods in which you can calculate this. The first one is not recommended for the exam at all, but it will help you to build concept. Can I say this 10 lakh share outstanding for all the 12 months? So into 12 divided by 12. But see now, what do I assume here? I assume that the ones which are bought on 12 lakhs, ones which were bought back on 1st of October were the ones which were issued in 1st of April. So in that case, they were outstanding from April till October. That means that's a period of 6 months. So here we will say into 6 divided by 12. And these ones were available for a period of 6 months again. So into 6 divided by 12, which would make this as 10, 6, 10, 26. But you don't want to follow this method on the exam. The reason being that in this case, this 12 lakh and 12 lakh amounts are matching. What if this was 20 lakhs and this was 12 lakhs? Then you would have divided this 20 into two parts, 12 and 8. And then that would have made your calculations more complicated and cumbersome. An easier method is, you would say this is 12 into 12. These are issued in April, outstanding for 9 months, so into 9 divided by 12. Into 6 divided by 12. But these ones are bought back. So for how many months these are not outstanding? That is going to be a weight, and that would be 3 by 12. So this would be 10, this would be 9, this would be 10, and this would be minus 3. And that would again give you 26, which is an easier and recommended approach. So in this case, in the earlier case, the weight was for how many months they were outstanding. And now the weight is that for how many months they are not outstanding when you buy back. Is this clear? Should we move on to next point? Which one? This one. The wait here is 3 months. That for how many months they were not outstanding? You bought back in October. So they were not outstanding in October, November and December. So 3 by 12. Let's move on. Profit after tax 50 lakhs. Number of equity shares 1 lakh. Number of preference share 1 lakh. Face value 100. Dividend rate 10%. Number of equity shares at the beginning of the year. New shares issued on 1st of December are 12 lakhs. Calculate EPS. Yes. $20. Anuja, how much? 12 lakhs. 20. Kaushik. How much? 120. 20. Profit available for equity shareholder 50 minus 10. How do we get 10? 1 into 100 is 100 into 10% is 10. So 50 minus 10. Denominator, the first 1 lakh share are outstanding for entire 12-month period. So into 12 divided by 12. But next issued, which are 12 lakh, are outstanding only for 1 month. So which would be, this should be 1 and this should be 1, total 2. And that would give us basic EPS of 20. माइनस क्या? कहाँ से आया? ये 10 कहाँ से आया? प्रेफरेंस डिविडेंड. सो ये 1 लाख शेयर्स, फेस वैल्यू 100, सो टोटल हो गया 100 lakhs into 10%, 10 lakhs. Any questions? Any doubts? We've just started the session. Try not to yawn. Should we move on to next concept? Yeah. Okay. Write down this one sentence. In case of stock splits or bonus shares, assume that it happened at the beginning of the year or earliest possible time. In case of stock splits or bonus shares, assume that it happened at the beginning of the year or earliest possible time. So again, let's try to understand what this thing really means. Let us say on 1st of Jan, we issued 1 lakh shares. On 1st of April, we issued 4 lakh shares. On 1st of June, we split the stock. What is the meaning of split? That dividing one share into multiple parts. So let us say that we split one share into 2 parts. On 1st of July, we issued another 10 lakh shares. On 1st of October, we bought back 4 lakh shares. Let us say profit after tax is 100 lakhs. Calculate basic EPS. Read that sentence carefully. That in case of stock split or bonus shares, assume that it happened at the beginning of the year or earliest possible time. Yes. On 1st October you bought back the share. Huh? One stock is split into two. 12. 8.25. 8.25, right? 8.33. Ganesh. Yes. See, it's really simple. You solve it as if there is no such thing as split or bonus. And if that is the case, this would be into 12 divided by 12, into 9 by 12, and into 6 by 12, and into 3 by 12. Then all those things which have happened before that stock split, simply multiply them with 2. That's the logic. So assume that it happened at the beginning of the year. For this, I assume that it happened at the beginning of the year. But the stocks which I am issuing on 1st of April, I cannot assume that they were split on 1st of Jan. And therefore that next part of the sentence, or at the beginning or at the earliest possible time. So again, straightforward, into 2, into 2, into nothing, because it is happening after the stock split. So how much would this be? 2 lakhs. How much would this be? 6. How much would this be? 5. And how much would this be? Minus 1. And then 8, 13, minus 1, 12. 100 divided by 12, which would give us 8.33 basic EPS. Huh. Multiply with 2. Then we can multiply with 2. That's what I'm saying. So you're saying that we can calculate 5 lakh into 2? No. If you do 5 lakh into 2, then we assume that this 4 lakh were issued on 1st of Jan. हाँ, so एक ही बात है ना, 2 कॉमन आएगा. It's the same thing. 4 into 2 or 2 plus 6, it would be same. Now, what if it was not a split, but it was a bonus? And what was that bonus? That for every 3 shares, 1 share was given free. Then calculate what would be the basic EPS. For every 3 shares, they had given 1 share free. Denominator. Hmm. 9.33. 9.33. So I'll tell you a simple technique. On the exam, people find this question very difficult. So use some very basic common sense here. That assume that you have 3 shares. After having given free, how much will you have? 4. So can I say every block of 3 shares will get converted into 4? Correct? So simply what you do is divide by 3 and find out how many blocks of 3 are there and multiply with 4. So into 4 by 3, into 4 by 3, and that's it. Nothing else. Have you followed the logic? That if you had 30 shares, there were 10 blocks of 3, and then those will now become 40. So therefore, divided by 3 multiplied with 4, and then once you solve for this, how much do you get here? 9.33, and that you use here. Are we good? Any questions, doubts? Okay. So let us stop with basic EPS here.